All right, welcome everybody. Wall Street Jesus here. The Saturday sweep series continues. I think we got, what do we got? 5 weeks of this left. And you know, the approach here, what we wanted to try to do this time around, start off a little bit with the basics like we did in week one, a little bit in week two, and I wanted to concentrate on the most important things before you start looking at flow, looking at stocks, looking at any of that crap. It means nothing. You know, you could have one of the sharpest edges right in front of you in this game, and if you don't tackle the basics before you start pushing buying sell buttons, you're not going to get anywhere too far. Okay, so we wanted to start with that. And you know, for those of you who missed the first 2 weeks, basically, I mean, the most important thing in my eyes that I've learned throughout my experience in this game, the first thing you have to know, okay, you have to sit down with yourself at least a weekend, a week, and you have to understand and be honest with yourself and try to figure out what type of trader, what type of investor you are. Okay, what are your strong points? What are you capable of being? You know, maybe you don't have the time to be that active intraday trader. So swing trading is something you have to do, you know, or position trading is something you have to do. Or maybe you lack the discipline to be selective enough to succeed on a swing trade basis. That was my issue in a sense. Day trading, believe it or not, I was more disciplined. It allowed me to do the things I needed to do to find success, where I'm not a patient individual, and swing trading, I realized I had to be very selective and extremely patient. And, you know, my admiration with the market and flow and watching every order that hits the board in the options market and how a stock reacts to it, that affected my swing trading in a negative way. You know, so I found a happy medium in a sense where I can be extremely active, okay? I can do the things I need to do. I'm comfortable with what I'm doing and I need to do. And it allows me still to focus on the things to find success for that type of style, okay? So these are the things you have to tackle initially, right off the bat. Okay, because a lot of people like to throw out tickers and names, or is this a buy, is this a sell? And they never mention, you know, what type of trader they are. What are they looking for? You know, is AMD a buy? Well, you know, if you want to buy AMD on dips and tuck it away longer term, yeah, it may very well be a buy. If you're a short-term trader, you know, maybe it's prudent to wait for a dip and see flow come into it before you pull the trigger. Or maybe it's something you're looking to buy on weakness and flip into a squeeze or strength as a short-term trader. See, these are all the things that matter. You know, I don't believe in the set target prices. I think that's what, you know, makes these analysts, at least they're basing it off fundamentals. But you know, we don't spend much time. We're not investors per se. We're traders. You know, we can't say Apple's worth $400 and I'm gonna buy it here and look for that upside. You know, that's a fallacy to us. That numbers it doesn't exist. So we need to base it on something, and not only base it on something, we have to figure out the game plan of how we could take advantage of that according to our time frame. All right, and that's the most important thing. You know, Apple could be worth $2,000, but if it's not going there within the next month and I'm a short-term trader, what good is that? Okay, so these are the things you have to really iron out initially. That's what we focused on for the first week. Kind of, you know, segued that into the second week. And then as we move on here, we can talk about more flow on a week-to-week basis. We could even discuss you know, depending on what type of trader you are, what type of flow you should focus on, you know, the type of order flow, the type of setups and stuff like that. So that's what we'll start doing this week. Okay, we'll start getting into that, and I'll leave some room for questions. because I enjoy that, and I know it's important to you guys as well. So we'll leave enough time for anything that's on your mind, question-wise, strategy, setups, flow-wise, anything at all. All right, so just to recap the week. Okay, and you can see here, this is, and I'm no technician, okay? Everything I base my trading on and what I focus on in regards to the market comes down to two things. The most important thing is wise guy activity, obviously, and what I tie with that is overall sentiment, okay? So even though I'm a day trader, I still find sentiment extremely useful, you know, some of the shorter term sentiment stuff. As far as windows, whereas you get more aggressive in regards to some of the flow I'm seeing, and less aggressive, okay? And again, we have the Steam room with a decent amount of members, several different types of traders, so I'm sharing the views on sentiment and what we're seeing, you know, from extreme short term to long term, because it applies to several different people. So here's what we've been looking at for a while now, as far as the overall market's concerned. Okay, and yeah, we had this crazy rally, strong as hell. It reached a point where the longer term sentiment, in other words, positional money, hedge funds, mutual funds, investors were getting quite bullish, okay? As a matter of fact, they were at a bullish extreme, per se. And that was happening, I would say, probably around these levels here, okay, into these levels. So the market continued to rally through that bullish extreme, okay, maybe even, let's say, even lower. But what that longer term sentiment was telling us, my interpretation of that was that the risk reward from this level is not favorable. Okay, and that, in common sense, from where this rally started, signal to us to be more selective, to stay lighter, to still participate, because the market could still grind higher, and you don't want to just ignore that, especially if there's flow. Now, if there's nothing to buy flow-wise, then, you know, you're sitting on your hands. But if they're still aggressively buying names and you feel it's worth your while for a trade, you still want to participate. But what we were explaining to everybody, the approach you want to take is take your risk down dramatically. So if the market continues to go higher, you're going to make some money. Okay, you're always going to be unhappy. You could have made more, but at least you're participating and making some money. But if you do get caught in a breather, in a correction, not a crash, just a normal overdue breather, you're not going to get hit over the head, and you can get hit over the head when you're playing options, especially just on sideways action, right? Because not only do you have to be right as far as price is concerned, time will eat you up. Okay, so that was the setup into this. And then we finally, after the final gap here, seem to have topped up and entered what I refer to this as consolidation. Okay, and when you enter this sort of environment, I only know one playbook throughout my career. Okay, you get a lot of retail traders, retail investors, they label this chop, right? Why do they label it chop? Because what retail traders and investors love to do, based on emotion, and even the pros, I'm sure they have that emotion but know how to fight it. The retail trader and investor is most bullish on days like this, on days like this, right? On days like this, where the market is green and looks strong. They're not interested on weekdays because emotionally that sets off fear, right? You're probably holding something or see something that's down dramatically. The last thing you want to do is buy it. You're losing money. So the playbook when you're in this consolidation chop phase is to avoid getting chopped up by buying at the right spots and taking off risk when everybody else is most bullish. Okay, so in other words, you get this little pullback here. You have sentiment now gets washed out over the short term. Okay, people are worried about the market crashing, a big correction. So what happens here? You have sentiment going from bullish to now approaching bearish. Okay, we see bullish wise guy activity come in at these levels. You want to look to pick a spot. Here's where you're looking for an entry. It's okay if you're early. That's totally fine. Okay, because you're buying the dip here. And you're looking to lighten up into this. Okay, same thing here. You know, you had this come down. You're looking to buy off the pullback when sentiment aligns and flow comes in. And you're looking to take off risk. I mean, even me personally, I used to just get out of it, flip it that very next squeeze. But that's me. You know what I mean? But the most important thing is to not chase that green. Okay? And not only that, even if you're buying at the right spot, being realistic. This is, and I see this all too often, this is not this anymore. Okay? This is a new environment we're in. So you can't expect to buy into this dip and just hold for new highs. Okay? You can't expect to buy this dip and hold for new highs. Especially if you're playing options. I mean, you're dead. So you want to at least take off a good chunk of risk on the squeezes you get. Okay, and you may think that even this here, I remember sentiment going off somewhere around here, okay? These squeezes here, the good thing about chop and this range, these squeezes are decent. So in other words, when you're looking and let's say you see, I'm just using an example, Facebook catch a sweep, stocks down $1.50. Let's just say, I'm hypothetical, okay? And you see a Facebook call sweeper come into that weakness. These rallies here, you're going to have, you know, Facebook catch a nice squeeze per se. So you want to lock some of that in. You're not scalping 20 cents. These squeezes, you get paid when you're buying at the right time. But you can't expect everything you buy to just go to new highs when you're in this type of environment. Now, the problem with that is, what do people see, right? They see Tesla. They see Amazon. So they think everything can turn into that. Every name can be that. And you may get lucky and touch a name like that. But the problem is not every stock is like that. Okay, as a matter of fact, it's been those high beta FANG names that have solely participated in this type of run. Okay, where you have like banks, for example. All right, banks, you could have bought this dip here, and you know, if you didn't take risk off into this squeeze here, you know, they start rolling over, and if you're in calls, this little rollover could hurt you. Especially if you don't have the time behind you, right? If you played monthlies or 2 weeks out, or some people even weeklies thinking they're just going to get a run back to highs, that's where you get beat up. So, you know, the common thing that a lot of retail players like to throw around there, and they like to give the excuse for the reason why they're losing money. They just throw that chop label out there. But, you know, there are opportunities in chop. You just got to be selective, be patient, right? You can't look to buy like on days like this. You can't look to buy up here. You got to allow the market to set up again. But that's the only playbook I know over my 20 plus years in this game, when as trading is concerned, when you're in this type of environment. All right, so we're still in this. We're still in this. There is nothing that tells me or has been showing us in regards to flow or anything else for that matter, that this is anything but just some consolidation. And by the way, all those bulls, okay, remember at the beginning of this conversation, I told you how the longer term sentiment, the positional players were extremely bullish. Guess what happened on just this little consolidation? Washed out. Totally washed out. Okay, they're not flashing extremely bearish signals, which would mean contrarian bullish. In other words, they haven't turned extremely bearish, but it did its job. It wiped out a lot of huge chunk of that overly bullish sentiment out there. And that's what the market does. Okay, so eventually we're going to get a resolution to this. Now, we don't know. I mean, nobody knows. We got nothing that's going to forecast whether this is going to go this way, this is going to go this way, or we chop around like this for another month or two. Okay, but what we do in the steam room, we look at every single day. We take the clues we have as far as flow is concerned. We look and keep a close eye on sentiment, and something's going to give. Okay, if there's a wash here, okay, and the market rolls over based off earnings reactions, because right now that's the most important thing. That's pretty much what's going to dictate where this market might be headed. Not just earnings, but the reaction to earnings. Are they going to use that as a catalyst to sell? Or are they going to start buying some of the stuff and rotating into some of the stuff that maybe they've taken down too much? You know, so that's what we're looking for as far as answers are concerned in regards to earnings and post-earnings flow. But, you know, a couple things we're looking at, like I said, if this market does roll over, we get a flush similar to this, what's likely to happen? We're going to see bullish signals as far as sentiment is concerned. Okay, and we're going to be looking for some sort of bottom like this. We're going to be looking for wise guy activity come in on the bullish side into that, and that will set up another trade. Okay, if this happens to consolidate a little bit further and all of a sudden market starts firming up and we see the flow really starting to get aggressive on the bullish side, okay, that may signal that this little thing is over and we can start some sort of leg up to test highs. So those are the things we're looking for right now, and personally that's how I approach earnings. Okay, because earnings is a total crapshoot. Not only do you, even if I put the number in front of you, I can physically give you what the company is going to report, you still aren't 100% accurate of how the street's going to react to it. All right? Has the name rallied too much into earnings already? What was their guidance like? Their number, they knocked the ball out of the park in regards to the number for the quarter, but their guidance was light. And you got all these shenanigans. Nobody knows. It's a total crapshoot. Even on names that caught a ton of flow, it's a total crapshoot. Okay, because there's no way of knowing. Like, again, WDC, for example. All right, one of the names that's had exceptional flow. Now, you know, unlike the market chopping around, this thing has been strong. You know, chances are we'll stay strong into earnings. Now, again, we don't know how it's going to react. The flow's been bullish. Everything's been bullish, but the stock has been bullish. Okay? So the opportunity, for example, the way I look at it is if they happen to sell off this Western Digital off any cockamamie excuse related to earnings, if they come in and start sweeping call side again into that weakness, that would be extremely bullish. And that's the play. Okay? Forecasting earnings and the reaction to earnings, that's rolling the dice. Totally. All right, so those are the things we're looking for now. Like I said, we got the banks coming out first, right? I think the end of next week. Friday's a holiday too. You got Good Friday. The banks have looked like crap, let's be honest. They haven't looked too hot. I would say overall sentiment, though, is getting pretty bearish on these banks. That's a good thing. But again, let's see what earnings look like. Let's see how the street reacts to that, and then we can reevaluate. Let's see what the flow looks like post earnings. You know, do they come back and look to buy these things? Does the flow turn And just now we start seeing put sweeper activity in these things. All this is possible. That's why there's no reason to try to forecast and just wait. And if the opportunity you were hoping for, you missed it, then so be it. You know what I mean? So be it. I mean, you're a trader. There's a gazillion trades throughout the year. You plan on being in this game probably for the long term, I hope. So if the setup is not there, just spit on it and wait for the next one. All right, so that's sort of where we're at as far as in the steam room right now. We're waiting to see some of the earnings here. You don't want to put on too much risk. You know, if you're a short-term trader, you're looking to play maybe some of the run-ups prior to earnings and get out before they report. You can do that on a smaller scale. But the bigger setup, big picture-wise, you know, we want to see what the post-earnings flow looks like. That will tell us a lot, okay? I mean, me personally, what I think may happen, what I'm hoping for, and that doesn't mean it will, is some sort of rotation through a chunk of earnings season. In other words, what happens sometimes, you know, depending on what stage, you know, what companies are reporting, you may see the money rotating to biotech for a month, you know, to avoid some of these earnings. You know, biotech, they're really not too concerned about earnings, so some of the money will go there if they see value. You know, FANG has been too hot, or some tech names like Apple have been too hot, so maybe they rotate into biotech or energy and stuff like that. All right, so those are the clues I'm focused on. And as well as the overall market is as well. I mean, that's the first thing on my mind, because, see, what I like to see even as a day trader, when you get up here and you know your upside may be limited, your risk reward is not in your favor, even as a day trader, the most juice comes off this. This is like that slingshot, you know? So not only you get that, maybe that intraday squeeze off the low, or the following day they buy up early weakness, you get that push into green, and then, you know, then the market seems to get tired, right? You see less and less in that. So that's how even sentiment applies to even just day trading. All right. But again, you know, some of the names have looked incredible. You got WDC has looked incredible. You know, some of the tech names, this SWKS has been an animal. You know, some of these semiconductors. The Micron, which already you can see just sideways. I mean, but it's come a long way. You know, it's come a long way. So just breathing right now. AMD got that nonsense Goldman Sachs sell initiation. You know, they brought it down to the bottom of this range again, and we'll see. You know, we'll see if they start buying this thing again. But the problem with a lot of these things, AMD has been seen call buying, all kidding aside, guys, and you could have, you know, probably from on Twitter, me posting it, this whole entire trip. You know, Micron, you wouldn't believe the action in Micron. You wouldn't believe it. I kid you not. Like, let me just, you'll get a kick out of this. Hold on. Where am I here? How come I can't? How come, where's the search feature? I lost the search feature. But I was going to pull up the activity Micron. Literally, out of this consolidation, it seemed like every single day Micron was catching call sweeper after call sweeper after call sweeper. You know, even into earnings, we saw that sharp, deep in the money call sweeper activity. So this is nothing new now, you know? And the other thing you got to understand, because I hear a lot of people, you know, talk about this constantly, the pros, when they sweep like this, what they're doing is they buy initially, okay? They buy a little more, they buy a little more, and then when they get that gap and that explosion, they start rolling up, rolling out, okay? So they take their initial positions, they lock in some money, they go further out as far as time, they go up as far as strikes, price. Okay, and so now they're looking to catch more. It happens again, they roll up and out again. Happens again, they roll up and out again. The issue with that is that when they do that, they will continue to do that most likely until this thing tops out for good. There's always going to be call buying that ends up underwater at the end of this move. Always. That's how they play. So that's what makes it difficult. Even though you see Apple call buying continue to come in, they're not initializing aggressive new positions up here. Most likely the chunk of it's just them rolling up and rolling out and rolling up and rolling out. Sometimes they'll catch a big move like this. I remember, the gold miners. I don't know if you guys remember me posting. The gold miners, they did this. Remember this SLW, how hot it was at one time? They kept sweeping and sweeping and sweeping right from here all the way up. And they were still sweeping up here. Okay, these things aren't going to run to heaven forever. Eventually the music stops. So that's the problem, with some of these names that are up so much and are so long in the tooth action-wise. This is not initial activity. You could see, like the SLW, you see that square there? That's where they really started to get aggressive in Apple. It's still there. I haven't touched that square. Here's where they initially started getting aggressive in Apple. In other words, what I mean by that was Apple had a down move here, right? Some put action, a lack of call buying, nothing exciting on the call side. Then, after this downtrend, this is where the flow really started to turn. This is where the flow really started to get aggressive on the call side. So that's what we refer to as initial activity, where they first start buying out of a little downtrend or consolidation. Okay, this is not the first bet ever in Apple, obviously, but this is the beginning of where the action started to heat up after this downtrend or consolidation, whatever you want to call it. So this is where the sweet spot is. Okay, that doesn't mean you can't ride Apple flow on dips, for trades. Obviously, you can do that, but you can't weigh it. You can't weigh this buying. You can't put the same weight on it as the initial activity here. Again, this is what we call, the sweet spot per se. And this is a lot of times the hardest point to buy it. I mean, people weren't bullish Apple. They hated Apple back then. Now everybody wants to own Apple. So that's the difference. And there's a lot of stuff like that. There's a lot of stuff like that. Like even Tesla recently, you guys remember again, that deep in the money call sweeper, and then we started to see Tesla doesn't catch sweeps like we were seeing. A Tesla sweeper would be so rare. But off this pull here, they really started to get aggressive. Now we continue to see Tesla sweepers up here. We saw, I forgot what month, but you've probably seen me post a sweeper. What were they buying? The 390s or something ridiculous like that? But again, nothing like initial activity. Not saying you're always going to be right at this point, but that's not to overplay this term. That's the fat pitch. That's a sweet spot. The rest are just trades, and they're more likely to fail as this thing gets longer in the tooth. All right, and now we're running into earnings on a lot of these things. Let's see. Let's see. All right, anybody have any questions? I wish I had the search. I wanted to show you. Oh, you know what? Is it back here? Here it is. Look at this. I had the thing blocking it. You're probably screaming at me and I didn't even see you. Here's the Micron, just so you guys get a kick, okay? This is Micron. Like, look at this. Okay, this is now we're back into the beginning of February. Now we're going into January. I mean, this has been going on and on and on. So to think that we can weigh this action up here as strong as a signal as back at the beginning of the trend is just, it's foolish. It can be traded. And, I recommend you look to buy dips. You know what I mean? You look to buy on pullbacks, and you can have that trade there. But to think you're going to see the same run without some consolidation or pullback along the way, yeah, it's just not likely. At the least, some sideways action for months, right? I mean, that's how the market works. Anybody have any questions as far as that? We could get into some questions now in regards to flow, some of the names that have given you trouble. Let me pull up this so I could see. Hang on, bear with me here. All right. Let me see if I can get this the right time too. All right, let me see some questions here. This is from earlier. Okay, well, Tomer's talking about day trading, okay, and you're asking, I'm discussing swing trading here. How do I apply day trading in these conditions every day? It's the same exact thing, Tomer. It's just on an intraday scale, right? I mean, that's the obvious, but so in other words, I get excited when there's weakness. Okay, Steam Room members can tell you that. When I wake up and I see the futures red, that excites me. Why? Because I know that if I can see any aggressive wise guy call sweeper activity into weakness, I can get this for a day trade. You understand? So the same thing, I'm reluctant to buy this as a day trader. So very similar to what I was explaining on a daily time frame, where you don't want to buy up here. You want to buy down here when the flow is there. Okay? You don't want to buy up here. You want to wait for a pull where the flow is there. The same thing we do on an intraday time frame. Okay? So if a market squeezes and rallies, and I see this thing already has made a move, and there's some call buying up here, I'm less likely to play. Okay, now the rare exception, I may see a missile or a cannon fired in a name that I think has a good shot for me to make money. As far as a day trade is concerned, I don't care what the market's doing. Okay, so there are those exceptions, but I'm talking about as far as trading ES or SPY or SPX, I'm doing the same thing. I want to wait for the flush. I want to see call sweepers coming into that flush because that tells me the pros are buying into that selling, right? And I want to sell into the squeeze. Now, you bring up a great point here because just like I told you, swing traders fall into the habit of buying these pullbacks and trying to catch this move again, which is not likely. Day traders, I see this way too often. And I think it's options that creates the problem because options, you need a decent sized move to get some juice, okay? But I see a lot of traders make the mistake that they get a squeeze like this and it's not enough. You understand? They want the market, they want ES to go from down 7 to up 20. Which, come on, you know what I mean? So that 7 handle move wasn't enough. And what happens? They hold, and the market pulls, and they lose money. So it's a mirror image of each other, but again, just different time frames. And it can happen more regularly intraday, obviously, right? You can get the flushes intraday. They're more likely, where Swing trading, you have to be, the patience has got to be there. Because now we're not talking about on an intraday basis, we're talking on a daily basis. So you have this move here, you know, it's hard to stay and wait. You know what I mean? It's hard to stay and wait and not chase this up here. You know how many people chase this up here? You know, so if you put the highs here, what happened to you? You got chopped up. So that's what makes swing trading difficult. Does that answer your question, Tomer? I think that's what you were trying to ask there. Let's see. Let me get some questions. It's got to be an easier way with these questions things where I could see them better. Who do we got? All right, Branch is saying agreed on AMD. Goldman Sachs prop book was short, so they needed to make that book. Yeah, you see these Goldman downgrades all too often. You know, all too often. There's pretty much nothing behind it. Usually it creates an opportunity. So, you know, we'll see. I mean, if they come in buying, sweeping aggressively call side in AMD, there could be that trade there. But again, Branch, it's going back to what I said. That's the problem for a lot of traders. I'm not saying you, but just traders in general. There was a trade in AMD, but it wasn't enough. Like this pullback, if you guys remember, you remember, Branch, remember the put selling that came in here and the call buying? There was some decent action that came into this pull. So you got this, but again, it's not enough for traders. You know, they want, what do they want? They want this move. So they hold through this chop, and then the Goldman downgrade bit them in the ass. Where in reality, it's just back to where it started. You know? But if you played, again, the calls, time, and everything else, ate you up for breakfast. So, you know, people ask me about AMD, and, you know, I got asked a couple questions on Friday about AMD. Do I think, based off what I've seen in flow, AMD can still be a decent-sized winner from these levels? Yeah, I do. But there may be a correction and pullback or consolidation along the way. So you're going to need enough time there, you know, and you may want to piece in there if you're looking to catch that. Otherwise, it's just a trade. Guys, the flow in AMD, they were buying Jan $2 leaps, $2 on AMD. That's where it started. So, you know, the stock hit, what, 15? You know, and you look, pull back here. That got scary. May not look it, but percentage-wise, I think it was 8 to under 6. And then consolidation and the break again, right? Had a run. People what? They want to tail AMD action in here thinking it's going to 20 in the straight line. Here comes the wash. Shake people out, some sideways, move higher. That's the problem. Now, one of these may be the final rollover and a bigger rollover, and it's more likely to come up here after a move like this. That's all I'm saying. So it's tough. It becomes tougher. Yeah, thank you, John. I found the magnifying glass. What happened is the GoToWebinar thingy was right over it. So I had the GoToWebinar panel right over the magnifying glass, and I didn't see the magnifying glass. So that was the problem there. What else we got? Let me see here. Yeah, I see a lot of you guys giving me the heads up on the search. I appreciate it. How do you as a trader remain sharp throughout the week, especially when working from home? That's an interesting question, Paul. I never worked from home. For those of you who are not aware, I was a broker, so I went into an office, got dressed up, all macked out every day. You know what I mean? And I needed that environment. To this day, I still go to the office. I do work from home, but I still go into an office. I cannot work from home. Some people can. Some people enjoy just sitting back, you know what I mean? Spending time with the fam and working from home. Um, so everybody's different, Paul, but I hear you. It's hard. Again, I don't know how your finances are set up and if you can afford it. They have a lot of spots now. I forget what they call them, but for individual offices. You know, it's just a one-man office. It's not that pricey. You go in every day. You got an environment there. There's other people working around you. Uh, you know, you can hook it up the way you want to hook it up. And if you're that type of individual, sort of like me, where you need to get out up every morning, have your coffee, the paper, you know, just to get you motivated every day, um, you know, that's an option. So I don't know if you're aware of that. There's several of them here in New York, so that's the issue you may have. But I hear you. And I know a lot of people like that. A lot of people, their demise, especially in the brokerage business you had where people could set up an office out of their house and it was the death of them. So you're not alone there, Paul. Matt Diamond is screaming Tesla. I think he's excited about that, is how I would interpret that. I don't know if that's a question. Maurizio is saying, how better to interpret the different type of wise guy alerts? Okay, that's a good question, Maurizio. The best way to interpret wise guy activity, period, is to use it, like I mentioned in weeks past, in addition to what you do well already. Okay, so it's kind of like that confirmation indicator. For me, here's how I use it. Okay, I'm a day trader. Now, I don't know if you guys came into the free day pass on this yesterday. Okay, my interpretation of the flow was wise guys on the call side wanted no part of that market Friday. Okay, call sweepers wanted no part of that market Friday. Now, these are things that, if you're a member of the Steam Room, we talk about every day, and I share with on audio, video throughout the day. So you're not expected to instantly be able to tell these things, but trust me, it happens a lot quicker than you think. It's not that complicated. I'm not a complicated guy. I need to keep things as simple as possible. Otherwise, I end up in a shit fest. So it's not that complicated. But, you know, we were talking throughout the day. There was nothing, zero, exciting on the call side all morning into the afternoon on Friday. There was some bull flow out there, okay? But there was nothing I even took for a day trade. Okay, I ended up playing that ILG because I thought the risk was minimal, and I was looking for, you know, maybe to get lucky and catch a move. I ended up just making a little bit of money, but it never got hot. But make a long story short, that was my interpretation of the flow Friday. Okay, so here's how I look at it. Friday, sentiment, overall sentiment, okay, for what I look at, intraday sentiment, was extremely neutral, dead neutral. Flow, wise guys, you know, flow was mixed at best. They weren't looking to get aggressive on the call side. So that tells me to do nothing, Maurizio. To do nothing. Those are the days. That's what I'm saying. Friday was a perfect example of a day where flow tells you nothing. So that means you do nothing. Okay, you could see there was green, red, and again, the green, there was nothing behind it. It was peanuts. $40,000 blocks, nonsense. Okay, the only trade that really interests me is the one I played was this ILG. Okay, this was the only thing. And, you know, had a little bit of a move, but then eventually rolled over, you know, sideways. Not rolled over, sideways. But this is the only thing I played. Caught the action right around here. You can see the volume underneath there start to swell. Okay, that was the only activity where they were aggressive. In other words, where they kept coming after it. Okay, it was indicating to me that somebody wanted those ILG calls pretty badly Friday. Other than that, there was nothing. So it told me to do nothing. And then as the day went on, you could see red, green, what happened? All of a sudden we start seeing more red, right? You can see here, there's more red popping up. So I definitely do not want to be looking to buy into any point of the market where I see wise guy action on the other side. And that's what keeps me disciplined. That's what keeps me from buying certain dips. I'm not buying every pullback. I'm only buying pullbacks where I see wise guy activity getting aggressive into. This is the last thing I want to see before I buy something. So that's how you can use this without looking, again, at an individual alert, okay? You don't have to trade any of these names. But just the overall Wise Guy Flow Friday could have saved you money on the long side, right? How do you know, Maurizio, if this little, which got people excited, this buy program up here, you can see, right? Big spike. I'm sure everybody got excited. What holds you back from buying that, Maurizio? For me, it's Wise Guy Flow. If I see the market do this, but I see Wise Guy Flow on the board all red, I'm not buying it. Now, I'm not shorting it either, but I'm not buying into this. And that's exactly what happened. You can see here. You know, if this rally, if they were excited about this rally, felt this rally was real, that board would be lit up all green. Again, we see that a lot. We see this board all green, Maurizio, with no put buying on it. That tells you the market's pretty strong. You know, the momentum's to the upside. But when you see that divergence, that's the edge in flow. You heard me say that before. So there's two different ways, right? You get selling. If the board is lighting up all green into the selling, that creates an opportunity, right? That's telling you that the sharp players out there are aggressively speculating on the long side into weakness. That's the strongest signal for me, because I'm a long only player in bull markets, especially. Okay? And like I said, if I see the market rallying, but I'm not seeing any green on the board and I'm seeing aggressive put sweeper activity, that prevents me from making a play on the long side at this level. I wouldn't even think of it. This is the last thing I'll do. And coincidentally, the market rolls right over again. So that's, as a day trader, that's how this stuff, and of course, out of my mouth, you probably say, yeah, you know, Jesus, it's your product, of course you can. But that's how I think it provides a huge edge on an intraday basis. Because there's, in my opinion, there's no other real-time indicator that provides you that information. So if you use it as that and not try to gain more out of it, right? A forecasting tool or something like that, it can give you a huge edge. Like I said, it prevents you from getting in at these levels. So let's say, Maurizio, just again, another example I'm giving you. Let's say now you're worried about this market running away from you. Okay? Now you're thinking, oh man, this SPX might squeeze into the close. You know, I want to get long ES here. But you see the board lighting up red, you know, that will be like, you know what? Let me sit back. Board's red Friday, you know, they're not behind this rally. If it squeezes, let it squeeze without me. But the signal's not there. That's how you would use it. Because again, otherwise, you would be buying otherwise I'd be buying every dip out there. How would I know? I got nothing to base it off of. Like, I know you guys, some of you guys use technicals, and that's great. Trust me. I joke around with a lot of you guys. I bust your chops, but that's even better when you use that stuff in sync with Wise Guy activity, with Wise Guy Flow. Because it's more information. You know what I mean? Even more of an edge. It gives you levels to look at. So if you see call sweepers coming into certain levels that you think are key levels of resistance where the flow may turn, levels of support where the flow may turn. All right, but for me, I only base it on two things. I base it on flow and sentiment. So how do I know that this move here is not buyable? How do I know that? You know what I mean? I got nothing to base it off of. Without flow, I'd be all over the yard. Now, it's not always right. I'm not saying it's always right. But a lot more often than not, when there's no sweepers behind the move is bullshit. We see many down moves, okay, or quick flushes where there's no put sweeper activity getting aggressive. They squeeze it right back. They wash it right back. So that's how it's used on an intraday time frame, Maurizio. Matt Diamond screaming by the dip in Tesla. There you go. Ani, what's up, brother? Did you go smaller size, more tries as a way to get the big sell-off worry out of the equation? Please talk us some about this. Seems very valuable right now. Okay, so you're talking about the market sell-off as a whole? Are you talking about a sell-off in the market as a whole when what? Oh, I know what you're saying. Okay, I think I know what you're saying. You're talking about this. Buying this, how do you know this is not the big one? Right? I think that's what you're talking about. Now, the answer to that, Ani, is how do you know that this is not the top? How do you know that, this is not a major top and starting a huge bear market cycle? You don't. But what we do know is when you get selling and you have sentiment on your side, right? Here's the day for you. This is just a simple put to call volume ratio. Okay? Here's what happened on that day. You can see it as an outlier, right? Okay. So 1, we had selling. 2, we had sentiment line up where the public's pretty bearish and either scrambling for protection or looking to bet on the downside. The last thing is you want to see some wise guy call activity surface. In other words, what I mean by that is if you see aggressive put sweeper activity, all that means is it may be early, okay? So you want to see that flow turn. You could use that as far as timing is concerned. That's what I do on an intraday basis. In other words, what I'm telling you is if the market sells off, I get the sentiment lining up. If the board is lit up all red on me, I'm not jumping in. I'm waiting for that board to turn and see buying come in, then I'll do it. Because how do you know you're not too early? And listen, you could be early, right? You could piece in, and who cares? But as a day trader where you want to limit your downside, you need that help on the timing side. So those 3 things, when those 3 things align, what does that equate? That means there's a higher probability of the squeeze coming. Okay? There's a higher probability that at least a short-term low is in place. Now, you can't say that about, you can't say that about any other spot. You understand? You can't say the market's less likely to go down just because the market is up that day green. You can't say that here. You can't say that here. You can't say that here. You know what I mean? But the odds and the probability of a squeeze go up dramatically in your favor when everybody's bearish and wise guys start to buy into that. So that's that fear of worrying about that being a part of a big crash, okay, that comes down to risk management more than anything. Because I hate to tell you, that applies to anywhere, honey. Anywhere. Just because a market looks strong, you're more likely to see downside. You understand what I'm saying? So that could apply anywhere. But what happens on these days, people get so worked up and have that same feeling you're explaining, and they go to position to take advantage of that downside, right? They start buying puts, they start selling their stocks, they start putting on protection, they get nervous. And we know it's a fact that when that occurs, what happens? The opposite. You know, it's not a magic signal. This is real money at work, right? This is not some survey. This is actual speculation and positioning in the options market, real money. So that's the only difference. That's the only difference. They're less likely to pay these put buyers. Is everybody going to get lined up on the put side, Ani, and they're going to score? So basically, you're going to have a market crash where everybody made money? Think about that for a second. Think about that. Just stop, sit back this weekend and think about that for a second. The headline is the market crashed and retail knocked the cover off the ball. It doesn't happen. So that's what you gotta instill in your head, that what you're worried about here, you could have the same worry anywhere on the chart, and in my opinion, you should be more concerned at those other spots on the chart. You're more concerned here because, again, that's why it works. Emotionally, this is where people get nervous and do not want to buy. So, yeah, and the answer to your question is, initially what you do is you go smaller in size so you feel comfortable. Because the more emotional you get about this game, the more problems it creates. You understand? So you play the size, you take down the size nice and easy, you play the size you feel comfortable with, and what happens is when you start seeing, even though it's smaller size, your real money at work and at play, and you see how it works out, you know, you're going to be less concerned about it down the line when you're actually benefiting off of it. And you're seeing it happen right in front of your face. Now, again, you got to understand, there could be losers anywhere. You understand? That's my point in this. It can be wrong, but you can have a loser anywhere. And that's where your risk management has to come in. Again, going back to the first, webinar we did here. You have to have the game plan, as you know, I know you do, but you got to have that game plan and that risk management set at all times. Because you never know when the big one's coming. You never know. You never know. And what you want is when the big one does come around, that you take some loss, but you're not buried alive. You understand? That's the most important thing. Did AKRX stand out in some way on Friday? Well, AKRX, I'm just talking about this here. AKRX is that biotech. They've been sweeping for, I think, about a week now. Small sweeps. One was decent size. But this thing halted on Friday, right after an algo sweep, by the way, and gapped up higher. And I think it was even up higher Friday. After the bell, they caught some news, and they were sweeping into the bell on Friday. So AKRX is a biotech, one, okay? So one, we know it doesn't get much more riskier than that, okay? So you probably want to play the call side and not the common, because if you catch a halt and it goes against you, you're done if you're holding equity. All right, but yeah, AKRX, the sweep stood out, not yesterday, prior to yesterday. You know what I mean? prior to yesterday, there was unusual aggressive buying in this. Yesterday was just, some tack on and follow through we saw, and they happened to catch the news. I think I posted on Twitter the AKRX, some of the action it hit prior to yesterday. And you can see it's been a decent name of late. But again, these biotechs are nuts. What else we got here? I played AMD for 15 minutes into the close. Yes, I'm a degenerate. Branch, we're all degenerates. And listen, we all want to play, okay? And, I said this we have webinars twice a week in the Steam Room. I mentioned this. We all like the action. We all like to play, okay? There's one thing when you like to play, okay? You lose money, but you understand why you lost money. There's another thing if you're pissed off and scratching your head on why you lost money when it's right in front of you what you did wrong. I love to go, like I made the example, I love to go to the racetrack. I love to bet every race on the board. I enjoy it. I don't leave there saying, how the hell did I lose money? I'm so pissed off. I know I was losing money before I even got there. I know that the few professional horse players out there, they can't play every single race on the whole card to make money. They go there once a week to play one race. So that's what I'm saying. If you're in this game to play and just to enjoy the action and you're taking it nice and easy, you don't want to get buried, you want to try to make some money, that's one thing. But you're not going to be pissed off and scratching your head wondering why you lost money on an earnings bet or why you lost money chasing a stock up $6 in a row. That's my point. If you're in the game to have fun, take it nice and easy, have fun. You try to make some money, but at the same time, you want the action to enjoy it. What else we got question-wise? So Marizo is also asking about the Thunderbolts and the block as far as the individual flow is concerned. Thunderbolts mean the order was a sweep. This Tetris block just means a block. Those are basically the two different orders that hit the board. I manually will post call spreads, risk reversals, put selling, and stuff like that. These are basically the two different orders that hit the board. Okay, sweep in my eyes is a more aggressive bet. So the more lightning bolts you see come into a name, the more aggressive that behavior was behind that order flow, and that can create strong momentum a lot of times. Okay, a block, I'm less likely to play blocks because blocks are not under the radar. There's nothing really sneaky about a block. Blocks are tied a lot of times to stock or something else that we may not even know about. Now, that's not to say every block order means nothing. I've traded off blocks before, but sweeper activity is most of the stuff I use for as far as intraday momentum is concerned. They're more likely to create stronger momentum over the short term. But that's the difference between the lightning bolts and the blocks. If you want Maurizio, go to, if you go to wallstreetjesus.com and you click on strategy, down here, there's a bunch of blog article type stuff. Give you a general idea. What's a sweep? If you have to worry about the bet, if it's a hedge and all that stuff, different types of way to use the information, couple rants and stuff like that. So wallstreetjesus.com, again, it's under the strategy section. All right. Also, guys, I wanted to mention to you, where am I here? If you're not a free member, it's free to this here, market updates. This is pretty much what I've posted on Twitter throughout the years, just more of it. on a daily basis, usually pre-market and aftermarket. I'll review some of the activity that's come in, and stuff like that. You know, some sentiment charts I post. So again, all you got to do, it's free, no credit card, no trial, no nothing. And basically, you get access to open interest. I'll post on there some of the stuff on there. That's market updates. All right, and as far as the steam room is concerned, throughout this sweep series, we are offering, where is it? Look at this. What a mess I make out of things here. We are offering the half off the first month thing still throughout this whole sweep series. So 50% off the first month. This is the community I was talking about. We're free. You know, you'll have access to the pre-market audio video stuff where we go over some of the open interest, game plans and stuff like that. That's all free. No credit card, no nothing. So, and then we offer a one-day pass too, similar to Friday. But see, this is what the one-day pass is fine. But you know, like Friday was a free one-day pass, okay? And people were looking for that call, you know, sweeper they could take a shot on, and you know, Friday was probably just as important a day of flow that told you not to do a thing. And believe it or not, that keeps you out of trouble, which is just as important as signals that make you, you know, to try to make you money. So that's where a one-day pass, you know, depending on the day, there's some active days, there's some non-active days, but usually there's always a little something. All right. But otherwise, if you want to give the month the first shot, it's 50% off, and you'll have access to all that. You know, we have audio, video now. I'm on there throughout the day, basically, you know, giving play-by-play on on all the activity I see, my interpretation of it, what stuff I may be day trading, you know, updates on sentiment to put the call, and that's all accessed on here. This thing you can enlarge. I don't remember how to do it. You stretch it out. Oh, maybe because it's not on. All right, let me get to a couple more questions before we call it a Saturday, and I'll let you guys go enjoy the weekend. With the Wise Guy alerts, is there any way to filter based on expiration, range, block, sweep? That's coming. That's the next thing. We've come a long way from the first trading room we've had when I got here. We've come a long way. Right now, the only thing we got, which is, you know, very useful, but you can screen put, call, or both. Eventually, we're going to have where you can screen, you know, just based on sweepers, just based on the month, the expiration, so you can focus on that stuff. That's all coming. Okay, so little by little, we're getting there. We've had updates every couple of months now. The most important thing was getting the search function, getting the filter tab, because this, in my opinion, one of the things I didn't like about chat rooms, I love when everybody's talking, okay? A lot of people share great ideas, strategy styles, but, you know, there are a lot of people out there, a lot of traders out there that already have a style, okay? They already have the way they trade. They just want the flow, you know? They just want the flow, the sentiment. So we got this filter tab right up here that basically is just my commentary on the action and the order flow, okay? So you can see all the small sweepers and stuff like that. You know, so let's say you see an order, Micron, you want to know if it was tied at 1556. You know, you could go back here and look at the commentary to see what I posted. All right, so that was one of the most important things. The audio, video, of course, that's quite important, and the search function. But all that stuff's coming eventually. Eventually. What else we got? Do you have a realistic method to find the most likely to move sweeper of the day off the board? For example, AKS was a winner at 160% on the day. It all depends. It all depends, Paul. It all depends on the day. I mean, do I have an opinion of the strongest activity on the day? Yeah. Okay. But it all depends on the day. It all depends. See, here's the strongest momentum, in my opinion, is when sweepers keep coming after a name. Okay, so hypothetically, okay, we see it in high beta, even though we haven't seen it a lot of this week. But Facebook, what will happen is we see a call sweeper hit the board. Okay, then we see another call sweeper 2 minutes after that hit the board. Then you see me manually posting smaller momentum sweepers coming in, one after the other. That type of steam, as I like to label it, that has the highest probability of creating momentum than any of the other one order stuff. You understand? So, because what happens is when they do that, they keep coming after that name throughout most of the day until it just has run away from them. And they will support it. So a lot of times you'll get that nice push higher until they stop sweeping. Okay, but at that point you have the ability to raise your stop loss and try to grind it out. You know what I mean? But there's no way of knowing, if you're asking where the explosion is going to come from, there's no way of knowing that, obviously. If we knew that, we'd all have our own island. A good example of that was this MBI, okay? This is not a name I usually would like to day trade off one order, no way. But there was steam that came into the name, okay? This was on Thursday, I think, right? Let's see if I could show you quickly so you could get an idea. MBI. Here. And there was more stuff that actually I posted manually, some smaller stuff. So you could see, was it this? 4-6? Yeah, right? 4-6. So you could see there's several orders in this name, okay? And there was smaller sweepers that followed that I manually posted. And that creates the steam. And on 4-6, where is it? I can show you. Here. So on 4-6, you know, they started buying, and then you get this. You know, that explosion. So they're more likely to have that type of push when they keep coming after a name. Now, that's what I was playing for out of this ILG, that's why I made a play on this name on Friday. But the buying slowed down and then stopped, and it ran out of gas. You know, the ILG, the activity came in over here. So this is where you pretty much want to start an entry. And they continue to sweep, and you can see, you know, had a push, even though the market was dead. And once they stopped buying it, you know, some profit taking. Yeah, it didn't fall apart, but, you know, it just ran out of gas, per se. So those are the strongest intraday signals as far as momentum is concerned. And that would be my method. But not individual orders. It depends on the size. It depends on a lot of things. Yes, there was an interesting South Korea put bet that really, I think, scared the call buyers away. That's what it seemed. Now, it could be coincidence more than anything. But there was hefty put buying in that South Korean ETF. Usually I'll see a sweep or a block of 1,000, and, you know, I'll post it in an ETF like this. You could see this quarter block of 176,000, another $400,000 sweep after that. And, you know, you don't need me to tell you what they're trying to protect against there. So, should be interesting, you know, should be interesting week coming up. Stacker say, can you explain CPCE-X, its relation to the overall market? Stacky, that's just basically, this is TC2000. So that's just the symbol on here. You know, like the McClellan oscillator on here that I have up here is T22106. So the CPCE is just the equity put to call. Okay, and it's on the intraday. You can do it on an intraday basis. I also use Sentiment Trader and a couple other things, you know, which actually give them a more accurate view on it, because this is just based on volume. But again, it gets the point across at extremes. You know, if you're trying to play an overall trend or something like that, you're wasting your time. But when you see an outlier like this, it means something. You know, it means something. And it tells you that the public is leaning a little too hard on the bearish side. And that can set up a quality opportunity, especially if the wise guys aren't buying it. You know what I mean? If wise guys aren't aggressively buying puts and the flow is bullish, but the public is extremely bearish, in my opinion, that's an opportunity. So that's all this is. This is no secret sauce. You know, you can get a put to call anywhere. They have total put to call, which measures a put to call on a volume basis of everything, index, ETFs, so forth. The CPCE is equity only. So this is just equities. That huge spike here was on the 27th. You're saying, what does that spike tell you? In other words, the spike tells you there's more put buying than call buying. It's a lot more put buying than call buying. So if it would go lower, it's the opposite. You know, more call buying than put buying. So here, that was this day right here, the 27th. See? The 27th. So it just told you that people were leaning on the put side on an intraday basis. See, the good thing about on an intraday basis is that it allows you that entry intraday, right? If at the end of the day, let's say the market squeezes off that, which can happen, okay? If the market squeezes off that, you look at the end of the day put the call, and you're not going to see that drastic of a move because it didn't close there. You follow me? So that's the problem with looking at the put the call end of the day, is that if there was a squeeze intraday, you're not going to get that reading. So again, that's another thing, by the way, stock, that will be in here. I promise. Will be in here. I'm going to try to make it a priority. I know there's more important things, but I want it in here like this heat map is in here. You know what I mean? I want an intraday put the call that I don't, well, now I share my screen, so you guys see it with me. You know, I keep it on my screen all day. Usually this is the screen I have up there, you know, and it's right there on the top of my screen where I keep it all the time. So you guys can see it. But eventually we want to get it put somewhere just like this heat map is. You know, where you can either have the heat map or you can have a put the call that you can look at. And a lot of people are interested in that, so we're going to work on that. All right, guys, let me get going here. I got my daughter. She's got horse riding, whatever I got to get to before they run away from home on me. I appreciate you guys sticking around for the weekend. We do it again Saturday. So like I said, any questions, you guys know where to find me. Join the market updates, okay? That's free. You have no reason not to. Free information there, whether you use it or not. If you want to give the Steam Room a shot, that's half off the first month. Okay, we're offering that through the Sweep Series. 1 day pass, $12.99. We also have private Twitter, which is $59.99 a month. That's just the alerts. Obviously, you don't have access to the room or the webinars, but just the alerts. I post open interest, some charts on there as well, but just the alerts and quick comment on that action if it's notable. Okay, but again, if you already have a strategy, you know, you may want to give that a shot to just get a feel for it before giving the Steam Room a shot. You can do that. That's $59.99 a month. But again, like I said, this is 50% off the first month, and you get everything on here, as well as private Twitter. So if you sign up for this, private Twitter is included in that membership with this. All right. So any questions, you can hit me up anytime anyway. Have a great weekend. Thanks for coming out. I'll see you guys next week. Earnings start Friday off, by the way. We got Good Friday coming. So Friday, the casino is closed. But should be an interesting week next week anyway for 4 days. Enjoy, everybody. I'll talk to you guys soon. Thank you.